This conference will now be recorded.
Okay, so they formed a company with $1 million is what these companies do. Then they did a 15 journal entry, debit account receivable, and what would they credit?
Cash.
Bad guess. Journal entry 15. They credit sales
That makes sense.
for 10 million. Go back here. So this is the journal entries the company's made, but this receivable is no good. Okay, so you know, at the end of the day, they make a journal entry creating a receivable and crediting sales, but they aren't going to be able to collect that receivable. Once they show this income, then they might go to the bank and get a loan. So they'll get cash or say, banks say, well, you know, we're in business to loan money to companies that are doing well. So they might loan them $5 million.
No payable.
I got that one right. Okay, notes payable. Then the company would say, okay, we've worked very hard. We need to pay ourselves some salaries. Let's just say $4 million. Because they've worked so hard to what they're going to credit. Credit cash, 4 million. Okay, so this is what they do in their first year of operation. Now, suppose we were to prepare an income statement, balance sheet, trial balance, and everything for this. What would it look like? How much cash do they have in the bank? At this,
Technically, they should have 11 million.
let's put they start off with $1 million.
Or 12 million.
They start off with 1 million and then they got 2 million
No
more.
money gonna get y'all money.
That's true.
Then they borrow what? 5 million, right?
They borrow 5 million. Yeah, but you see the 100 to 10 million is in account. So
Yeah.
And then they paid the employees how much in that journal entry?
4 million, which leaves them with 2.
So you see how y'all just miscounting and saying that people got all of this cash? So now you begin to see what can kind of happen. So let's see if we can do a trial balance. And so on this trial balance, the cash should be what? 2 million, right?
2 million.
Accounts receivable will be how much? How much?
10 million.
10 million. Then over here, let me make this to be a note payable. So I'm just going to say a notes payable. How much is in the note payable?
5 million.
Look at my nose and my hair.
Then we have common stock of how much?
1 million.
Sales were how much? 10 million.
10 million.
Then we had salary expenses of what?
4 million.
And of course, as an outside investor, you don't see those journal entries, so you don't know any of that. All you do is you have this trial balance, and
16 million.
the Auto Summit is that 16 million.
I can't see. Yeah. 10-4, 2.
My Auto Summit's not on. I just have to put it in 16 million.
Correct.
16 million.
Oh, it's crazy.
And what's on this side? 16 million. So the trial balance is balancing. Then we get ready to do an income statement. How's that income statement going to look?
So we're gonna have 10 million for sales.
So that's our margin. We'll just put it at 10 million. And we might have other expenses. We're just trying to keep it simple. So our salary expense we said was what?
It's 4 million.
And therefore total expenses are 4 million. And therefore the company has net income of how much?
$6 million now.
Someone was telling me earlier they would look at the income statements and the financial statements, and they see that, and they would base their determination on that. So what's our ending retained earnings going to be, assuming no dividends? So the ending retained earnings is what? 6 million.
Million.
And if I did a balance sheet, how am I going to look?
You got 2 million for the cash.
And we have accounts receivable of how much?
10 million.
Ten.
That's it's that one.
$12 million.
12 million. We go on this side. We got this. Okay.
$4 million.
So this is actually what these companies were doing.
Sales about
So this is 4 million. This is what, 5 million, right?
$5 million.
So the total liabilities are 5 million. Common stock is what? 1 million. And the ending retained earnings is what?
$6 million.
So total stockholders' equity is what?
7.
So we're all in balance. So now, your mother comes to you and she's worked hard a long time. She says, okay, I got $1 million, son or daughter. Invest my money so I can get a high rate of return. And you look at this company, which has started off with just $1 million investment, made $6 million the first year, has a balance sheet with $12 million in assets, and they say you should invest your money with me. What you gonna do?
First, you're gonna want to invest. If you have no clue about the background, you're gonna invest.
So that's what so for Madoff, for all his folks, they looked at this, Enron, all of those companies, and they simply looked at this information and said what?
Invest.
We're gonna invest. Yeah.
They hit a gold mine.
Yes.
They said say less.
That's what they said. We should invest.
Yeah, and Enron lied on every last number on here.
Yeah. but they got your money.
Not mine.
And companies are, we look, today's companies are doing this all the time. And some of this occurs because so we got an income statement. Everybody can do that. Got a statement of retained earnings, got a balance sheet. Then there's a statement of cash flow. And remember I told you on the statement of cash flow what was supposed to happen? You're supposed to have your cash from what? Operations. And your cash from operations should produce what? A negative amount here, negative here, because you're paying off items and still have a positive cash flow. So that's what we said a cash flow statement is supposed to look like. Okay. And so let's look at preparing a cash flow statement for this company. Let's go back to the journal entries. First journal entry, we're gonna keep it?
Yeah.
Are we gonna keep the first journal entry?
Yeah.
All right, where are we gonna put it at?
We're gonna put it on
Financing.
financing. Yeah, it's investing.
And let's go back to the journal entries. What we're gonna do with this second one?
Gonna scratch that one out.
Say what?
Gonna scratch it out. Strike it out.
Where's my delete on here somewhere? I'll just bold it. So what that means is that we weren't supposed to use this journal entry. Then we go to the next journal entry. What we're gonna do with it?
We're gonna use that one. It's gonna go in operation.
Gonna go where?
It's a long-term liability, so it's gonna go in part 2.
By 3.
Yeah.
Why y'all memory short? What grade you say you wanted today?
A+.
Okay. Then let's go back to the final journal entry.
When you're done, I got a question.
Okay, so this is the salary. So where's that gonna go?
Number.
That's gonna be a use, right?
Yeah.
That's a type what? 9. So we paid them how much?
Type 1.
Who's that talking about type 1? 4 million.
No, she said part 1.
Oh, part 1.
Yeah.
Okay. So when we prepare the statement of cash flow, if we had just gone and prepared a statement of cash flow, if we just used our brain a little bit, we would have seen what in operations we have what?
What, 4 million?
Minus $4 million. So that's all people had to do. And these statement of cash flows are published. But people have a tendency to want to stop here. So that's why if you're gonna beat vicious things like this, you got to look at a statement of cash flow. And that shows a negative $4 million from operation. So as soon as you see operation is negative, that's something wrong with the company. Remember we talked about the fact this is just like your salary. So if a company don't have anything, if you don't have any salary, and of course your money's down here, of course you, with the company you put $1 million in, and you borrowed $7 million.
So why is not the first journal entry with common stock? Why is it not a type 2 investment?
Okay, that investment involves you investing and expanding your company. Journal entry 1 is financing. That's how you finance the company. And so you finance the company with $1 million. So that's financing. That's not operation. You know, if you put $1 million in, you want some income earned. Okay? That's not income. That's what you invested in the company. That's the $1 million you're getting ready to invest of your mama's money. So it's gonna come down here. Okay, then we have what's how much? This was 5 million, wasn't it? We borrowed 5 million. Yeah, I think we borrowed 5 million. That's the loan. That's down here. And so, yes, the company has 2 million in cash. But it has 2 million in cash. Where'd the 2 million come from? What you borrowed. So the company didn't earn anything. So,
Cash.
so this is the problem.
That's a Ponzi scheme, right?
Yeah, but this is a way for you to break the Ponzi scheme. If people were investing, then they would be down here. Got it? But you allowed them to put fake money up here based on a journal entry like this. This is a fake journal entry. You could be selling to a company you could control. Anything. You just make the journal entry. Some company, they just made this journal entry. So that's why we study the statement of cash flow. So that you're able to go through and look at the underlying company and see what's going on. So what you all are going to be doing, a couple of things. You're going to be having a homework problem to work. So we'll talk about it next time. But you got the material, you can read it and see if you can work the problem. Now, with a large company, and you still should be able to do it, you're only going to have the financial statements. You're not going to have those journal entries. So we'll talk about the indirect method. We'll go through an example. But the A-teams are going to go on and do a statement of cash flow. So everybody should have submitted something somewhere, put it in Blackboard with the names of everybody on the team. Then I'm going to give team numbers. And once I give you that team number, then, and then I'll tell you what problem I want you to work. The other thing that you're going to do, you're going to do a cash flow paper where you're going to look at a company that you're thinking of working for or that you're going to invest in. And you're going to tell me whether you're going to give them $1 million or not. You're going to look at cash flow statements for 3 years, which would include the income statement, the net income, of course. And you're going to apply what you're learning to say, hey, I would invest $1 million. If you go work for a company, because all your retirement and everything, your fringe benefits are tied up in that company, that's like $1 million company. And what you got to tell me, you're going to look at the cash flow statements for 3 years, and then you're going to tell me whether you'd invest $1 million in that company or not. So it's got to be a publicly traded company or a company where you can get the statement of cash flows for 3 years. You're going to lay those out, and it should be an example of a cash flow paper is in there. They go above the cost, but you do a similar type thing. You talk about the company and what it does. Then you lay out the cash flow statements for 3 years. You do a little bit of analysis, and then you say whether you would invest $1 million or not in this company. It might be a pretty good thing to do if you plan on working for a company or if you're currently working for a company. You need to know how to analyze the statements and analyze more than the income statement and balance sheet. So you all have been a good class today, some good presentations. They're all A-B presentations, I would say. So, and I'm pleased with what I saw. Y'all got those teams together and y'all got things to me. So that makes me feel good because now I know I can begin to assign you all work and you all are going to get it done.
Hey, man,
I have to wonder, are you going to get it done? And so now y'all have come along and did this. So now we are ready to roll in the course. As we did.
I have a question.
Yes.
Last Tuesday, you had that journal entry 2 problem due, but you never posted the problem.
What about journal entry problem 2?
It was due at 4 p.m., but I didn't see the problem attached to it.
Well, it was in course content. And I called on people to present last time. So I got those 2 names down so they get some credit. And I tell you to do something, you got to do it. You're working for me. So you don't take anything for granted. Because there's a spreadsheet that's going to be coming out pretty soon. And it's going to have everything I told you to do on it. And the points for what you got for doing what I told you to do. So we're ready to roll. No smoking now. You're going to pollute us, so you can't be smoking. Messing up our environment, messing up our virtual classroom. Is everybody on the team? Is there anybody who's not on the team?
I have a team in text message, but I'm not sure if it's the same class. It's called marketing channels.
No, not the same class. So y'all get with him and get him on the team. Now this is accounting here. So get him on the team because the work will begin. This is just to get you all started. So at least by next Thursday, you're going to have to work a statement of cash flow problem. Each team will be doing that. And we got a little behind today. So we'll slow down a little bit. We don't want anybody to be lost. So I'll go through the lecture on this next time. You should be reading that material. Then each team will present a homework problem on next Thursday. And then the following Tuesday, you'll have your exam on statement of cash flow and review of financial accounting. Any questions?
When is your next office hours? Tomorrow?
Tomorrow?
Or is it? Yeah.
What time tomorrow?
I thought we had them on Friday. We can do Monday too, though.
We'll do Monday
Okay.
at 3 o'clock. Monday at 3. So that'll keep people like Tara out of trouble. And they think, and they be want to run around everywhere.
Man, everybody.
Then get the virus in our classroom, so we don't want that happen. How we coming, Dustin?
Hey, Professor Boyd, yeah. So for some of the smaller groups that only got like 1 or 2 people, is it okay if we like merge into other groups?
Yes, merge into other groups.
All right, just to make sure.
That's fine. We just want to learn, and we use the groups so that you all can work and support each other. So we do half works by group, half individual. If you're on a group, you got to do your part. Because you have to know there'll be a lot of work that will fall on other people.
Gotcha.
You got up until after the first exam, so you got about another week or so. So you got to get these groups going. And then after that point in time, I'm going to say, all right, the groups are there. No divorcing after this point in time.
All right. I didn't even know this assignment was due.
What is this assignment due at 2:00?
Yeah, I don't know what assignment you're talking.
This this practice
This what?
the practice problem 2 assignment. That's for a group the continuing student. I mean the new
Oh,
student.
that's old. That's old.
Yeah, I didn't know that was a thing. So what you mean it's old?
So can you one more time repeat what we have to do by next class?
Got to read what I said. I'm gonna look at your teams, and so you got to read material on cash flow. I'm gonna give you team numbers, and that's gonna correspond. Then I'll correspondingly give you a problem to work on the statement of cash flow for each team.
You're going to give that to us in class?
Yeah, I'm gonna give it to you sometime Monday,
Okay.
so that way you have it, and you'll be ready. You can pay attention, and you'll be definitely ready to have your problem work. So you got to be okay. You know what your problem is. You can look at what we're going on over, and then you'll be ready to have your problem ready to go, sent in Blackboard, so I can pull them up and you can explain, the problem to me. Keep it in mind that all of those fraudulent activities that we looked at, the reason people get away with things was because people decided that learning how to do a statement of cash flow was too difficult. That's what they decided. So they wouldn't pay attention and learn it. But it caught up with them with all of these companies. And with the current president, since he'll probably get reelected, and since if you contribute to him, he'll pardon you. So people gonna be doing all kinds of things. I'm serious, I'm laughing, but I'm serious. If you know that you can, defraud people out of $10 million, and you give him $1 million for his campaign and he pardon you, what you gonna do? So you're gonna have to really be on the watch out. Everybody be safe this weekend. You're a good class today. I was pleased with the presentations and performances. Let's stay safe this weekend. And then we're going to make this big push in September. Remember, we only have September and then October. And we're virtually done. And so, based on that, I think the university was very smart to start virtually. Start early, but virtually. And then we'll see how the online works. Now, whether we meet on campus depends on a number of things. One of those things is whether you all can do the work virtually. So if you're able to do the work virtually, that's one thing. And not, then you have to drive on down here to Houston.
That's a negative. I don't know about that. Yeah, they acting the fool down there.
You want to continue to say we can get this done virtually. The hardest part is, that where we need things done is getting your teams formed. So if you go get your teams done and your work done, if we meet in the classroom, and if everybody can't be there, then I got to teach some people in the classroom. I got to teach some people online like this. So I got to teach the same way. But that depends on how you're doing, how everybody is performing, and how you're doing on your assignments. That's going to determine how we go forward. So your destiny is in your hands. Do the work virtually. Or live in the medical center, you can go on and take that that injection that they say that's working now, and then you'll be ready. You can go on and be part of the trials and be ready.
Until your want to.
Okay. So y'all have a good one. I'll see those who sign on Monday at 3.
See you on Monday.
All right, yeah.